Recording in progress.
Okay, guys. We were doing this one. Right. Any questions with this? This one. The last one for the Tude 9.
Oh, the one that was normal.
Yep.
No. I mean, some.
Right. You understood?
I didn't understand.
You didn't understand? Yeah. So basically, yeah. No, this is the double entry. Yeah. If you have any, yeah, just copy it down. Yeah. If you have any question, ask me. You came late, yes. What happened? You came late. You came late, yes.
What?
Today. No. 4:30. You started 4. No.
Didn't you go in 5 last week?
No.
5:30.
4:30.
So it's 4:37.
Yeah, 7:30. Yeah.
Oh, that was 5.
No, remember I sent you the text.
I thought I was just the first go. Last week.
No.
Ah,
So
it's 4:30.
the last text you had read.
Yeah.
Yeah.
So it's 4:30, 7:30. Not 5:30.
No.
Okay. This is what. This is just my. Thanks to all the What's it song? That's all.
Says returns. Yep. Okay, guys. Part B. Explain the effect on honest equity of the entries to correct error I. Yeah, the first one, Roman number 1. What will happen to the honest equity? Yep. Yeah, first part B. Advertising. Yeah, no effect.
Yeah, no effect.
No effect. Yes. Right. Everyone is okay with that? Yeah, because net profit will decrease, and negative owner's equity will decrease. That will increase owner's equity. Yep. You want me to write the answer or you guys okay?
Okay.
Okay?
Yeah.
All right. Then part C, explain the effect on the net profit for June 25 of the entries to correct. Second one, Roman number 2.
Positive.
Positive?
Yeah.
So net profit what will happen to net profit? Increase by
132.
132. Cleaning expenses decrease by 132. Yep. Part D, explain the effect on account equation if the Roman number 3 not been corrected. Yeah, if it was not corrected, what will happen? What would happen, guys?
Owner's equity will be overstated.
Owner's equity will be overstated by 100 because expenses have been understated by 100.
Yeah.
Yep.
And then liabilities being understated by 100.
Liabilities would be understated by 100.
Because the loan is understated by
Yep.
and no effect.
No effect on assets. You want me to write that one?
So if you use rounded, so like you can see them all into it.
Yeah. Which one you want me to write? The part D, yes? Yep.
Yeah, party.
Part D. Okay, sure.
So,
Yeah.
we have to say no effect on assets.
Yes. Yes. You know why? Definitely hard to say. The reason is account equation. Yeah. So yeah. So do we have to mention about assets, guys? I mean, any accounting element, even if it was not affected? Yes. Why? Because They're asking the impact on the county equation. So then we have three counting elements on the county equation. So we have to talk about all of them, even though they are not affected. Yep. Which is a pain, but still, that's how the format is. Okay, guys. Part E. Importance of a statement of account. Right? What's the importance of the statement of account in terms of faithful representation, guys? Cost checking mechanism for the
Journal and ledger entries
yes, for the journal and ledger entries, and then
that are matching the real world.
real world economic event will be reported, and it is that would be free from material errors. Yep. Yeah, we don't have to worry about the complete part. Yeah, you can say if you want, you can say about the neutrality. Basically, we are ensuring the real world economic events in the reports, and then free from material errors. So it represent an accurate set of reports, and also they are free from bias. You want me to write the answer? Anybody wants me to write the answer? Okay, and then last one, guys, part F. So the effect on account equation of silver lines of the entries to correct error 5, the last one. That of course are all right. Right. Firstly, what are the assets? Have a look at the yes. We have how many assets being affected, guys? 2, yes, inventory and accounts receivable, right? Then because there are two impacts, I will keep this open for the assets to increase or decrease. I'll start within brackets. It will make my life easy. And yours too. Yep. So what would we write, guys? Inventory increase. How much? 750. And accounts receivable decrease. Yep. How much? 495. So then as a result, assets increase by 350 to 55. To 55. And then liabilities, what happens? How many liabilities are affected? Again, 2. What are those? GST and accounts payable. Accounts payable. Yep, accounts payable, what happens, guys? 495. And what is the other liability? GST clearing decreases, yes? 90 up. Okay, so then as a result, liabilities will increase by 405. Okay, last one, guys. Owner's equity. How many items are affecting the owner's equity? 2, yes. Sales returns and the cost of sales. Sales return, which is a negative revenue, is increasing. As a result, owner's equity decreases by 450. On the other hand, cost of sales and expense decreases by 300. Yeah. So then owner's equity increases, net profit increases. So sales returns increase 450 and cost of sales expense decrease by 300, meaning our net profit is decreased or reduced by how much? 150. Okay. Okay. Please write it like this. This one owner's equity, sales returns, how much was it? 450, yes. 450 less cost of sales. How much was it? 300. Reduces net profit by 150. Decrease 150.
So is this the hardest question in the whole exam?
I mean, in terms of correcting entries, yes. If you, as I told you guys, if you can handle this question, you can do any question. Any correcting entry question. Yep. Okay. Yeah, technically that's it for the correcting entries. So we did 4 questions. Yeah, practice them. Okay. And then when we do papers, we'll continue to do more questions. Yep. February. Yeah, when we revise the unit 3, we'll do more questions.
Why are we not doing unit 4 before that?
No, because otherwise you guys have SACs. We have to practice for the SACs.
So when you say unit 4?
Whenever you guys are ready with unit 3. It's up to you to decide. I don't mind. Yeah, as much as you want, we can do revision. But again, we can't do the entire year, no, the revision for unit 3. We have unit 4 as well. Okay. Right. Okay, then shall we start, guys, with, I mean, any questions with this unit number 9? No? Okay, shall we then continue the tube number 10? Everyone is having 10? Yeah. Yeah. Yes, I think I printed for you. Can you please ask me before you go? Yeah.
So you also.
Yes. I think I printed for you as well. Thank you. Yeah, ask me before you go during the break.
Wait, there been theory questions on like whether we got things?
Yeah.
What?
Yep.
What do you got?
In delivery docket. What is delivery docket, guys?
Like the list of items.
Yeah. Delivery docket is, what does it really confirm, or what information does it confirm? Yes. Type of items. Yep. Yeah. So what is delivery docket? A document or a source document. Yep. That confirms the quantity and the types of inventories that have been delivered by the supplier. So usually it should tally with the what document?
Invoice.
Invoice. Correct. It should tally with the invoice, yes, because let's say the supply is we are purchasing 10 laptops, right? So the document says 10 laptops, fine. But when they invoice, they are invoicing for 12. So it doesn't make sense. Yes, we are paying for 12 and they have delivered only 10. Yeah. So basically it should tally. Yes, makes sense. The invoice should tally with the delivery doc, right? Before that, what do we send basically?
Order form.
Order form, yes. Order form. We order, look, send us 10 laptops, right? So if they have 10, yeah, they'll send us 10. If they don't have all the quantities, they'll send whatever they have. Yep. So then order, there is no requirement that order form should tally with the delivery document. No, right? And also they can't send more than what we have ordered. Right? We have ordered 10 and they are sending us 20. No, it doesn't make sense. Yes. So we have ordered 10, they have sent us 10. Right? You don't need 20. Right? So usually the delivery document and the invoice can be tallied with the order form, but it can't go beyond the order form.
Rory described as an inventory gain.
No, but no, it's not inventory gain, why? Because I mean it can be inventory gain if they have invoice only for 10. They have sent 20 and they have invoice for 10. Here they have charged for, if they have charged for 20, no, it's not a gain. It will be a gain if they have charged, if they haven't charged for the extra office, yes? Yeah. Yeah, that's the lesson for today. Okay, guys, do you remember that we didn't do theory? Theory, did we discuss?
No.
I think with the theory I said something, yes? Sorry?
Yeah,
Oh.
Something, not this person.
Not this one, yeah?
Yeah, we just did this one.
Okay, then shall we write this?
Oh.
Come again?
We said we're gonna skip this.
Okay. Are we going to write this one now? Or later?
Can we do that? First now?
Yeah, we can do, but we need the theory as well for now. I mean, if you want, I can send the theory. You can do it at home. What do you think?
I'll put my spot from.
Yeah. Yeah, go to the sales returns, please. Page number 3. Please take down this one.
Can't see.
Yeah, please go to the sales return in the page number 3. Okay, next one is guys, evaluating the inventory losses under FIFO. How do we evaluate the inventory losses under FIFO? Yep.
Best price indicator for
Sorry,
best price indicator.
first price. So basically, we apply the FIFO usually, yes. Whatever the inventory that we have received first, is the one that is assumed to be loss first. Yep. What are the reasons for inventory losses? Yep, inventory theft, damage, undersupply by suppliers, no supply to customers. Okay, next one is, guys, evaluation of inventory gains, right? How do we evaluate the inventory gains under FIFO? Sorry? Yes, the latest cost price, right? In which column? Latest cost price in most recent, or the latest cost price in the in column. Yes, good. Why is that, guys? Because we think that the most recent transaction that caused the inventory to increase has resulted in the inventory gain. Okay. Is it can it be any transaction or specific transactions? Yes, Harry. Any transaction or specific? Any transaction. It can be any. Yep. Okay, there are two reasons for inventory gains, but for the FIFO, there's only one. Right, difference between FIFO and identified cost in terms of the valuation of the cost of sales and closing inventory, right? Okay, take down this one. When inventory prices are rising, cost of sales under FIFO is expected to be lower than identified cost. Therefore, net profit will be higher under FIFO. Next one, when inventory prices are rising, the inventory at the end of the period is expected to be higher under FIFO than identified costs, as the less expensive inventory will be sold first, leaving the most expensive or more expensive inventory in the business. Okay, this difference between FIFO and identified cost, I'll explain you when we are done with the questions. Because I want to show you the numbers, otherwise it doesn't make sense. Perpetual one, please read. I'll explain. Let me know when you are done reading. That's the part about nothing. Done reading, guys? Okay. Perpetual inventory system. What is perpetual means? Yeah, those who do general maths would have heard perpetuity. And perpetuity. Huh?
Sorry, can you?
Continuous, correct. Forever. Yeah. Yeah. So perpetual means what is it, guys? perpetual system of recording. Remember, these are coming to exam, okay? These benefits and costs coming to the exam. Coming to know this one. All the theory that I have given, they are subject to be examined. Okay, guys. So this one, perpetuity means as the transactions occur, they will be recorded in the inventory count. Right? So perpetual, right? As it, just as it takes place in the business, it is updated in the inventory count. Okay. Let's say you go to Coles and purchase 2 milk cartons, it will be updated as you scan it or as you pay, it will be scanned, right? Then virtually it is. At the real time it will be updated.
But those like transactions won't be in the general ledger till at the end.
No, it won't be in the general ledger. Correct.
Until the end.
Yeah, until the end. Yeah. So until they count and process the double entries, it will be there, right? But ledger count, the inventory card will be updated. Inventory card or the cash receipt journal or sales journal, they will be updated. All right. But double entry is different story. However, what is the opposite one? So are there any other methods of recording inventory? Yes, that is periodic. Periodic means at the end of the period. So the accountant or the owner will wait until the end of the period, right? So then the inventory will be recorded. Inventory will be updated, right? Yes, Munana?
What do you mean by period? Like what?
Period. That basically periodic against the perpetual system. What the other method we have is periodic. That means at the end of the period. So let's say during the if the business is not that busy, right? Maybe let's say antique shop, right? So they'll wait, or maybe car sales, they'll wait until the end of the period. Maybe like at the end of the period in the sense maybe monthly, okay, or quarterly. They'll wait for the last day of the period, then they'll update the records in the inventory card. Because they don't have to do perpetual, right? They don't have to do continuously. Real time, they don't have to worry about updating the records.
Wait, so does that mean they record the whole inventory count?
Yes, at the
Wait, yeah, like it says they also recorded at the end of the period.
yeah, that is at the end of the period they'll record. That is inventory loss or gain. Right? Inventory loss or gain they'll record at the end of the period. That's correct. Because why? Inventory losses and gains are detected at the end. The physical inventory. This is what you are saying, yes?
Yeah.
Physical inventory count is done at the end. Physical inventory count and the perpetual recording system is not the same thing. Because why? Physical count you can do in any inventory recording method, whether it is perpetual or periodic. Regardless, you can do the physical. What do you mean physical count? You go to the store, the warehouse, you count physically. 1, 2, 3, 4, and so on. Yeah. Make sense? Yeah. So physical count is done in any method of the inventory card system. Why? Because they want to see whatever that is in the paper is also available in the inventory card.
Yeah.
Sorry, inventory physical. Whatever that is available in the paper, meaning inventory card, is there in the store. And that is the purpose of physical inventory count. Yes. Then at the end, they'll figure out if there is inventory loss or gain. Right? However, guys, perpetual system, these are the benefits. Right? Reordering is assisted. What do you mean by reordering is assisted? They don't have to wait for the they don't have to wait until the customer complains that there is no stock. Right? Only the customer will figure out there is no inventory in the right in the item. Right? No. They know the inventory manager, whoever is doing that. I think calls and those things they are automated. Like when the inventory level is running down, automatically the what is it? The order will be called because there are thousands of inventory items. No one is going to monitoring, no? I mean, it's a bit hectic.
It's
Right?
like just in terms of.
Just in time, yeah. Okay, guys, then inventory losses we can identify. Fast and slow moving inventory lines can be identified, right? Interim report, what do you know, interim reports?
Like midterm.
Yes, in the middle of the, let's say if the owner asks the accountant to prepare reports in the middle of the period, usually we do at the end of the period, in the middle of the period, then rough report can be prepared. Right, because at that point we don't have to worry about counting inventory or anything. Whatever it is in the inventory card, we record and report. Then there are costs also with the perpetual inventory system, right? So it's setting up the method, maintenance and technology is more expensive. Staff must be trained, and also for recording and monitoring inventory, there should be more staff, right? So technically, they are the costs. Right, most of them are financial costs. Right.
Right, so is that the computer that like inputs each transaction? In a perpetual inventory system?
Yes, but we need like, you know, staff, we need staff for that. And also we need to train them to run the systems and also set up and maintenance. We need, I mean, we'll have to spend money. And then recording and monitoring. What you are saying is correct. I mean, we can do recording automated, but every business may not have automated that one. That's the problem. No? Okay. Okay, guys. Then these are the costs of perpetual inventory system. Right. This part, as I told you, the difference between FIFO and identified costs we'll do at the end of the second question. Right. Did we finish the first one last time?
Yeah.
Yep.
Yeah.
Sorry?
Almost original. Oh, this-
A and B I didn't do? No. Okay, I can give you the answer. Okay, how do we do the identified cost, guys?
Labels, marks, but
Yes, we label or we mark the cost price of each and every item, yes? Right. Next one. This is a not necessarily an ethical question, common sense. Right. Explain why it is ethical to include in the same sale any inventory that has been purchased at different cost prices. Is it ethical, guys? To include, so in one sale transaction, let's say customer is purchasing 10 units, right? And we are giving them inventories, right, that were purchased at different prices. Make sense? Does the question make sense?
it's like different inventory.
No, let's not same inventory. Let's say we are selling textbooks. Okay, so we sell textbook. We sell 10 textbooks, right? One set. I mean, let's say half of them we have purchased at $50 each. The other half, 60 each. Make sense? Is it ethical to do that?
different batch.
Yes. I mean, it can be the same product, same unit, same product,
Different batch.
but yeah, different batches. So maybe cost has increased, supply has increased the cost, right? Material cost, wage cost has increased, so then cost price is higher. Then is it ethical to sell different cost prices following the same sales transaction?
Yeah.
Yes.
As long as the customer has the same unique like price of product.
Price, they have the same price.
Like you allocate the cost like evenly with the one. Like,
Okay, all right. Yes, wonderful.
Depends on the inventory.
Yeah, doesn't matter, whatever the inventory, it can be.
Like,
take
what
away.
about like fruits? Like, you don't wanna have those, like, old fruits and then have the new fruits and feel the same price.
No, the cost price, not the freshness or anything. Same, identical product, identical inventory, but different costs. But yeah, food also, can be like, something was produced today, another set was produced yesterday. But as long as they are not expired, no problem, yes.
Wait. So it's fine.
It's fine. Yes, it's fine. Right. So as long as the product is identical, we are charging, as you said, same selling price, doesn't matter. Right? And we don't, and the customer doesn't really want to worry about our cost prices. It's our problem. Cost price is our problem, yes. Right? So yeah, so then that's fine, guys. Right? As long as it is the identical product, no problem. So okay. Okay, so technically we have to do the question number 2, guys. Before we start that, let's take a 5 minutes break.